Oh man, it's been a long time, Rob.
I know it's been way too long.
I
Way too
mean, it's
long.
been 4 to 6 weeks, something like that. But we
Yeah,
do
exactly.
we do have a reasonable excuse.
I had a reasonable excuse. I had some family stuff going on, and I was traveling quite a bit back and forth to my parents' place. So yeah, I was pretty busy. Normally, the summertime is a time when the market tends to slow down a bit, so I
Yeah,
didn't feel like too bad missing things. But I do feel bad like we haven't been able to connect and get together like we normally do.
yeah, no doubt. And we both honestly, it's been a shit show for us both. I've had some family stuff going on. I just did an interstate move. You've had family shit going on. I mean, I'm not really. It was almost like the perfect storm for both of us. Usually, and what's interesting is a lot of people don't know this, but you and I, since we've met each other, like I feel like our shit storm runs in tandem.
It does. I think we've got a lot of parallel universe stuff going
Yeah.
on. It's been surreal.
Yes.
It's been
Yes.
surreal.
Yeah. We live the same in the same
We live the
house.
same life. We're like 6 months off of each other either way. Like,
Yeah. First, it does certainly seem like that. So, anyways, you and I, it's funny. We've been talking for like an hour and we haven't been recording anything, and we're like, okay, like maybe we should hit the
maybe we
record.
should actually hit the
Right.
record button. Maybe that's a good idea
Right.
because
So,
yeah. But we have only been talking about trading.
I know, I know. I mean, we've been talking about everything from journaling to lake starts to whatever. So, yeah, let's just get into it. So, one of the things, and we kind of where we stopped talking, we decided we would hit this button, is really we were talking about our process, and it really kind of came down to the fact that you said that you were teaching your son how to trade, which I think is awesome, right? Because he's interested in it. And for those of you guys who know Rob or don't know Rob, Rob's a math nerd. He's a genius, right? And his son is kind of following in the footsteps as far as being, into math. And so, trading obviously is very appealing for
Yeah.
people who are
And
interested in
he's
math. I mean,
studying econometrics and stuff in college. So it sort of also scratches that itch as well. That sort of finance and what's kind of looks more of an advanced look at um, processing a bunch of data and trying to figure out how economies work or trying to solve other big problems. And so like the market is just like a great confluence of like bringing all of that together, and also a large bit of noise that as someone who's like a pure math guy, that is always like trying to find a juggle around of like, because you're always looking for an answer, and in the market there's never a perfect
well,
answer.
and that's how the conversation started, right? So,
Yeah,
you were saying that, he always asks, well, why did this happen? Why did that happen? And you're like, sometimes it just does, right? And
exactly.
so, it's
Sometimes
hard
it
to
just
answer
happens.
every single question. And I guess if you dug long enough, you could say, oh, it hit the 9-day moving average or some bullshit, right?
Right. But
Yeah, right. I mean, you can find an answer really.
you can make up an answer,
It
or
may
you
not
could
be the
like
right one.
you could do the CNBC thing and come up with some sort of random news for that day. But
Right, exactly. And the news, the media seems to always have an answer. As you can,
yeah, because they need an answer to
Powell
make things
stripes his nutsack on the left side and says,
happen.
right.
Powell's tie was purple, and therefore the market
That's
did what it did.
I think those algos actually do look at that goofy shit. So
Yeah.
yeah, for sure. So I guess just to kind of go back into this,
Yeah.
when you were saying something about your son, and you were telling him that essentially that things sometimes you just can't explain things. I kind of brought it back to our process and how we trade, which is essentially looking at untested levels and areas of support that were lost that need retested, and how price we've established that price travels from leg in to leg in. And really, when you think about it, based on the higher time frame, when you look at how our levels play and things happen, it's actually extremely efficient, right? It's an extremely efficient machine. It's sometimes the little wiggles in between that are hard to explain. And so
Right.
you were telling me that you obviously you read a lot. I read a lot, and you were I made a comment about how, when support's lost, that, they come back and they'll test the support. And it's like market makers kind of like finding if that value is really there and like testing the value. And I
Yeah.
guess this kind of leads into your introduction when you were saying, well, I read a book. And so please.
I know how you hate learning new things about the market.
Here you go. All
There
right.
you go.
Yes, fill me in. Show me how much I hate this.
So what we're looking at here, this happened yesterday, and we're looking at um, ES futures contract on a 2-minute time frame. And one of the things I've been reading about is high frequency algos. Now, obviously, that's not a domain we'll ever play in for many reasons. It's a totally different game and way of trading. But this is kind of a way that we can see what they're doing and maybe get some ideas of how to trade with the high frequency traders. And
Okay.
so, what you'll see here on this big push down, there is huge, huge, huge volume. So, what a market maker is constantly doing when we get big volume is they buy on the down candles, and they're constantly buying, 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 and they buy usually as roughly a percentage or in a ratio that ties into volume. So, you can see in that candle where we had really big down volume, that then becomes a level because the market makers will then want to get back up to that level to take their profits because they've been buying that entire time down. It
Really?
will come right back up to that level.
They buy on the way down when you have a huge volume? Well, I mean, obviously somebody has to
They
make
have to.
the other side of the market, right? That makes sense. Okay.
And so they're buying all the way down and they're going to take it right back up to where that most of that volume was, where it came in, so they can unwind all that buying.
Interesting. And that makes perfect sense because somebody has to be on the other side of the trade.
Someone has to be on the other side. Now, this is not something that happens every day, but it absolutely happens every week. And look for volume where it is much bigger than everything else. Like, don't just say, "Ooh, this one's moderately sized." You really want to see something with some signal there.
Well, that one
Something
that you
really
marked
stands
was
out
the
of the
one you
crowd.
marked is certainly an outlier for sure.
Right, exactly. And you can see it went right back up there and marched all the way back up before the selling could resume.
The scene of the crime.
Exactly. And so just something, I've picked up semi recently, and I've been not trading it actively, but I've been monitoring it. I've taken a few trades off of it, and it seems to work pretty well.
Interesting. So what? How? I mean, again, I know that this is still something relatively new that you're
Yeah.
kind of developing here, but what do you mean that is something that you've been trading? Like, can you explain to me? Just give me a
Oh,
concept.
when I see a big volume spike like that, I
Are you
will
trying to
mark
get
out
long
that
into
candle
it?
and then go with it usually and go with the selling. But as soon as it starts to turn and makes a higher low, then I will completely wait until we get back up to where that selling happened again and then look to short again.
Okay, so I mean, ultimately, it almost sounds a little bit like the trap trader thing that we
Mm-hmm.
also
It
offer.
is. It's very similar.
Okay,
Except these aren't, these are trapped market makers, and they're willing to push it back up there to unwind that position, get the profit out, and then let it go back down again.
dude, can you imagine the amount of capital it takes to push price back up 20 points? I mean,
Hundreds of dollars.
yeah,
Yeah.
at least. At least a night at Red Lobster.
Yeah, exactly.
Right.
The all you can eat buffet, no more. But
That's interesting.
but this is something I encourage you to look at. Because we're day traders, I typically don't even look at volume that
Me either at all.
frequently,
I've
to be
removed it.
honest with you.
Yeah, I've removed every
But I've
chart.
started at least to put this on my trading view chart that I have on the side,
Okay.
and I'm looking at it, and I'll call it out to you in real time when I do see them.
Yeah,
But
please. This is a really
it's something to keep in mind. And basically, you're still going with the flow. This was just a pullback for the market makers to kind of unwind that massive volume that they were forced to buy into.
wasn't that the high of Friday?
Yes, I
Yeah. Okay.
believe
So
so.
we had like a nasty little spill there. That kind of caught everyone off guard who was long.
Yeah, that was sort of a surprise push down.
Yeah, I agree. Yeah, it was interesting because when we were looking at the chart, you and I both noted like, well, the 4 hour just gained and then they fucking
And
rocketed.
then they crushed it. Yeah.
Yeah. Yeah.
Yeah. Yeah. And they just brought it down, and they brought it down with size.
Yeah, it was kind of, I mean, it was very abrupt. I mean, I was thankful I held that short, but it was,
But
I was stuck.
this basic setup is basically using that sort of market maker high frequency trading and how they, how they are managing their inventory and why this kind of thing would happen.
So what book are you, I mean, I'm just going to ask, what is the name of the book? What are you reading?
High frequency trading.
Okay. Is that like a
It's
$1,000?
by Irene Aldrich. I believe she's a professor at New York University Department of Finance. So
Okay.
I just thought it was some helpful stuff, and this wasn't like that wasn't like a setup out of the book or anything, but it's the hey,
Yeah.
this is how these things work, and then we could see how that manifests itself. And I've seen enough of them now that
Starts to make sense.
it makes sense, right? It's just like if you're an inventory manager, that's what you would do.
Yeah.
And then also, sometimes things go down 20 points, and then they immediately, over whatever the course of 30 minutes, walk back up, and you're like, why is this happening? Why aren't we continue to go down? Well, when you have a huge volume spike like that, they will do whatever they can to sort of like unwind all those longs
Interesting.
that they
Okay.
had to get into back up there.
So you told me last night or 2 nights ago that, you know, you're developing an algorithm right now, and you were telling me that you bought a book that was originally $3,000, and you were
Oh, yeah.
thankful you got it on a deal for like 300, which is
Yeah,
still
yeah, exactly.
an expensive book. How much was that book? Was that $1,000 book
No,
too?
this was like $80, I think.
Oh, okay. All
Yeah,
right.
$80.
A three
Or for
thousand
Zug,
dollar.
it's like 96 Canadian or something.
Okay. There you go, Zug. Good, solid C note. All right. That's too funny.
That's
So
how we screw them over.
what's the book that you're reading that was $3,000?
Oh, that's in the other room.
Okay.
It's another algorithmic development book.
That's an insane
It's
price.
really esoteric. I think it was really small print, like a small run kind of thing, really.
So do you have to like develop rockets to understand what's in this book?
It's not that crazy. It's more like getting your headspace around trying to manage, as an engineer kind of person or math person, you want to be very precise, and you really realize you have to be a little bit loose. You have to let things run a little bit, and you can't have like hyper precision and sort of in the retail world algorithmic space, because you just can't trade that frequently to get hyper precision.
Right.
And also, there's just so much noise in the system, and it's sort of like coming to grips with like trying to develop things that are kind of a loose fitting, nice sweatshirt that's comfortable and isn't over fitted, over optimized. And those kind of algorithms do work in very short time periods and short regimes. But anything that you want that's sort of like long term and has some durability, you kind of need to like back off of that and find compromises where if you keep on trying to wring out every last point, you'll typically lose. The whole thing will fall down. You'll lose out.
Well, it's interesting that you said it. So, and I know this kind of, I don't know if we're going off track here or not, but regardless, I thought it was interesting because you said to me the other day when we were on the phone for 2 hours and we were talking about this.
Yeah.
And we were talking about optimization and stuff. And one of the things that you said to me that I thought was really interesting was the fact that, I was talking about, oh, can we optimize this and this and that? And you're like, listen, sometimes better, like more optimization is not better. Like the higher win rate is not always the better answer.
Right.
And I thought it was super interesting that you said that because it's like, the normal, trader mentality is I want to squeeze out every possible dollar and I want to have the best win rate. I want to.
You do.
Yeah, and you were essentially telling me, like, listen, that's not always the best. Like sometimes something that has a 68% win rate, that is actually better than something that has a 74 because the 68 will work longer term, which I thought was a really interesting concept.
It's very it's sort of counterintuitive at first, but then you think about like when we go into day trading, sometimes we'll have, things will be range bound for 6 days. And then we'll have a couple trend days. And then we'll have something like we had Friday where we have huge bar to bar overlap and just chop city. And to have an algorithm that you can just run day in and day out and survive throughout all of those kind of regimes is really challenging. Some people do have algorithms that are just for specific situations or specific types of days, but you kind of have to be you turn those on and off, and when you feel like that day's happening. But I found I'm not very good at that. I'm not very good at predicting the future. Like on Friday, we had a bunch of chop in the morning, but then the afternoon it was pretty smooth.
Yeah, the morning was brutal.
The morning was horrible, and then it got progressively better. And so, yeah, in the world of sort of retail algos, it's better to have that sort of like much looser, much simpler kind of way of approaching it, because you don't want anything that's too brittle and not robust enough to handle all these different things that are handling. You can have random news or random tweets or some structural changes in the market. You want this thing to adapt and evolve with the market and hit those things.
Right. Well, one of the things I thought you made a very interesting comment to me, and I actually saved it. But you said that I'm trying to regurgitate this because I don't have it in front of me. But you basically said that you have no concept of how hard it is to create a day trading algorithm. Like I mean, you made it sound like the longer term stuff is way easier, and that the day trading is like, I mean, you've been racking
so hard, so hard. Yeah, like so. There's a couple really good. There's some people in the retail algo space that most of their stuff, especially with futures, is on the 4 hour plus and usually the day time frame, because that gives you the most amount of sort of like clean look of what's going on. When you step back and look at a day time frame, it's like, oh yeah, this is kind of nicely marching up or doing whatever it is doing, and it's a little bit. It takes a lot of the noise out of the system. The higher the time frame, kind of less noise. And when we start getting down to, trying to take 3 to 5 trades a day, things get so noisy so fast, and things like moving averages with 20 periods in them or whatever, just start falling apart on the day time frame scale with all of the things that that we see and try to like navigate through on a day-to-day basis.
Yeah, and that makes perfect sense. I mean, just think about Friday, like the first half of the morning was just chop city. I mean, to have something to be able to actually efficiently understand that's going on, it's like almost impossible.
Right. And I think that's where, the super high frequency guys, that's where they just own it. High volatility, and they're just going for one tick at a time, and they're not looking at anything but, this narrow band about pulling and stacking and what's going on. And, that's they own that domain. Like, I can't imagine trying to compete.
I bet you they clean up and chop. I mean, they
do. They totally do.
That is their bread and butter. It's got to be.
Yeah.
So when I was working on the floor, there was a bunch of clearing firms that were in the 141 Jackson building. And I remember like going to these people, and I was on the screen at the time, and I'm always looking for a better rate. It's funny because I'm really tight about certain things, and other things I'm like I'll go to dinner and spend a couple $100 or $500, and it's like cool, like I had a great meal. But like when it comes to commissions, I will nickel and dime somebody over like a cup, like
what are you doing here?
5 cents less, right? But so I was on this guy about his commission rate, and he was telling me that he's got some high frequency traders, and they do over 1 million trades a day. 1 million. I mean, they're basically giving them like almost nothing on commission.
Yeah.
They make a penny or something, but just that kind of volume is. I mean, just 1 million. What?
1 million. Yeah, they're just in and out, going for one tick. That's all they need. That's all they need. And
Imagine
yeah,
at
it's a different
Citadel.
game. It really is just a different game, and you have to sort of say, okay,
Yeah,
they're playing this. I am not competing here, but
no,
how
no,
can I
and that's,
capture the majority of a good move and sort of intraday trade that thing without being a hyper scalper or anything that
well,
we could
that's
never
why
compete.
Citadel doesn't hire traders; they hire quants
Yeah,
and
yeah, yeah, yeah. They hire
right?
quants, like guys
They're
who
not,
have their PhD in what's the fastest way to do a regression. You know what I mean?
yeah,
Like,
they're not trading anything; they're stealing ticks, right? Like,
yeah, exactly.
yeah.
They're fishing
So
for ticks. Exactly.
yeah, exactly. So that
No, you're
definitely,
absolutely right. If you look at the staff of any of those teams, they're physicists and mathematicians and people who have reasonably good coding experience that are using code to like solve big data or other sorts of problems or doing things like hyper efficiently. Sort of like the guys, Cormac, the guy who programmed Doom. Like one of the reasons that game was so good is he figured out a way to calculate the square root of 2 very quickly. Like when he was doing all the different polygons and different counts and things like that. And square root function super important for doing building that polygon mesh and things like that very quickly. And that was one of the things that made the game so successful was his
really.
ability to code that up super efficiently and do it faster than other people have not.
So I probably have more hours in Doom than I do in taking care of my children. So can you back up real quick and just, Cliff Notes version of that real fast? He did what now? So
So, so when you're building things like with a geometric mesh and things like that, you have to take square roots frequently. Okay,
okay,
it's just geometry, and if you're doing several million of them a second, how
okay.
fast you do that is important. And
So did he create this process? He's
so
actually the founder.
he basically wrote some fairly elegant, simple code that would just fly through it and do it very quickly.
That's awesome.
And that's one of the reasons that game was successful and could have a super high frame rate, even
Yeah,
on
well, that game
low
is light
hardware.
years ahead of everybody. I mean, remember
Yeah,
how?
and you
I
can
mean,
still run it on a calculator. You know what I mean? Like
yeah. I
my
mean, I
daughter's
remember being
TI 84, and she can run a Doom.
right.
You know what I mean? Like, um,
Well, the frame rate. I remember the frame rate. Like as a kid, I remember like, wow, look how fast you can turn left and right. It's like,
yeah, yeah, yeah,
like, I never appreciated. I guess
yeah. There's a dude whose job it was
yeah,
to yeah. So those that's a different. It's just a totally different skill set. You know what I mean?
yeah,
Rather than you think about game design and exciting characters and level design and all that stuff does matter. But at the end of the day, if it's not performant, then it can look pretty, but no one will buy it.
yeah. That's wild. Well, thanks for the insight, man.
Yeah, yeah. I'm full of random knowledge.
You should go on Jeopardy.
I'm going.
Would you? Are you a Jeopardy kind of guy? Would you crush that?
I think I would be too. It was funny. I will see if I can find it real fast.
Yeah.
I got called out for my random knowledge the other day, but I want to make sure I
Okay.
capture it right. Okay, so the Olympic opening ceremonies were yesterday in Paris, right?
Yeah.
And so my friend like pinged me, and he's like, "Hey, he knows I'm really big into cycling," and he's like, "Oh yeah, there's a French cyclist who's going to be like lighting the cauldron," and so we were talking about all the different countries and people that are participating in the Olympics, and he was talking about watching the opening ceremonies, and there's so many countries he hadn't heard of before, and he mentioned this country um, called Eritrea, and he's like, "Where is this place? And where are they?" And he just asked me because he figured I'd know this random information. And I'm like, "Oh yeah, that's right near Ethiopia." And I'm like, "You're not going to believe why I know about this place." And he's like, "Why do you know about this place?" And I was like, "Well, because the Egyptians used to like have these baboons that were part of some of their ceremonies for some of their gods, but baboons weren't native to the region by the Nile River in Egypt, so they would import their baboons from this place in Eritrea near Ethiopia,
And
and they
you
were
knew.
able to like." And and I knew this. Like this is rattling around in my brain. And
Okay.
finally, like for 15 years, I'm able to like lay some knowledge down for someone
How
onto
the fuck
something
did
that's
you know about
completely stupid.
baboons? Where did this come? I mean, how did you pick this up?
Well, they did some genetic testing on these baboons to try to figure out where they were coming from because they were getting these mummified baboons from these Egyptian tombs, but they're like, they're not from the region. We don't know where they're from. So they started doing genetic mapping, and where did they come from? And they use strontium. There's two different strains of strontium that you can kind of like pick regions based on those ratios of
Okay, hold
strontium
on.
in the
What
system.
is strontium?
And then they were able see,
This is
like,
way.
exactly. And so they were able to narrow it down to this like small area in Africa, Eritrea. So that's why I knew this random country that we were talking
That's
about.
not the cyclist you're talking about.
No, no.
Okay, I just wanted to make sure because I'm pretty sure this was the opening ceremony.
No. They were talking about the guy who was just before they lit the cauldron, and his name was like, he's 100 years old.
Twitter is going crazy with this Olympic ceremony thing. I mean, I don't even know what to say, honestly. I mean, this whole, yeah. I mean, it's gone a little far, I think. I don't know. It's like, I'm trying to be. I want to be politically correct without offending people, but at the same time, it's like, okay, like it's time to turn it down. Like we all have is accepted, you know, that people are allowed to do whatever they want, but will you please stop shoving it down our throat? It's like, okay, we've left you alone. We've decided that
I don't need to see it all the time.
yeah, you can get married, you can do whatever you want, but can we stop shoving it down everyone's throat, please? Like, you know?
That's funny. Yeah, I'm not I think Paris is doing it kind of right in terms of trying to make all the structures temporary and using sort of Paris as a backdrop for it and trying to do it in a less expensive way. But I'm more in the camp that maybe because the Olympics are so expensive to put on that perhaps we just put it in, like, you know, Greece always gets the summer games and someplace like Norway always gets the winter Olympics, and just
Right.
like hive it off, because otherwise, you know, all these countries pour billions of dollars into it, and a lot of those facilities then, you know, go to waste, or, you know,
They
have
do,
other
yeah.
problems with them. So
Well, I think, isn't the concept behind it usually and again, I don't know this, but I just assumed that the games usually generate billions of dollars of revenue for
yeah,
wherever it's being held. Yeah. So my assumption was it's probably not only to bring awareness, but really to maybe even stimulate those particular.
yeah, it's supposed to stimulate the economy, but oftentimes it costs more than what they get out of it.
Yeah, there was some games held somewhere, and you just briefly mentioned on it, where they built a stadium and all kind of stuff, and it only got used for the Olympics, and it went to waste. And it was like,
I think Sochi was one. Yeah,
it was a lot of money. It was just
a lot of them do. Yeah,
just for sure.
But yeah, that was that was funny, that picture you showed.
Yeah, I'm sure you saw that, right?
No, I didn't. I haven't been paying attention. I've been
Oh.
trying to code stuff up, and so I've been like in a my own little like world.
I mean, if you just open Twitter, you don't have to look for it. It's literally every other post.
Everywhere.
Dude, I mean, look, check this out. Now we're kind of. I might as well.
We can edit it out later.
Now we're talking about it. Look, ball sack Olympics.
Ball sack Olympics.
I'm not fucking kidding. Hang on. So here you go. Listen, I opened this up. This is literally the opening ceremony. This is the Blue Smurf. I was just showing you this guy's singing. Look at this guy's ball sack down here, hanging out of his shorts. Right? This is at the Olympic ceremony, right? Like,
That's funny.
I'm not even sure if you can call that a wardrobe malfunction. I don't even.
No, I don't think so.
You know, if your ball sack's hanging out, let's just be honest. Like, I mean,
at that age, you do, yeah.
Yeah, right. All right, so now that we're done bullshitting around and we took a little recess here and filled our bellies, let's get down to brass tacks and start talking about the market, shall we?
Yeah, I think that's what we should do. I'm
right,
excited to see what's going on.
I mean, this week has been crazy good. So, for people that were following along in our Substack, it's just been insane. We had a killer Tesla call that was absolutely outrageous. It paid up for $50, which is insane. And then really, all in all, the SPX and ES has had, I would say a historic move. We haven't had a push down like this since I believe it was April of 2023. So we've had a pretty awesome week of volatility, which in my opinion was much, much needed. I mean, we have really just kind of been grinding up for what seems to be nonstop for a long time now. And to be quite frank, almost kind of painful.
Oh yeah.
It's like, how do you? I mean, yeah, you just keep buying support, but like at some point you get concerned, right? Because you're like, God,
And
they're gonna pull the
when does
rug.
this dam break? Exactly.
Yeah, right. The rug gets pulled at some point, right?
Yeah,
So
it's not a matter of, if, it's just when it's going to happen.
it's swim for sure. So let's talk about that real fast, and we're going to start with SPX as usual. I'm going to go ahead and just blow this up to get rid of us because nobody cares what we look like. All right. So there we go. All right. So this is a weekly time frame. We finally had 2 down weeks in a row. Now the question is it going to continue? Right. And so in my personal opinion, I do think we are still coming down. Now, how we get there is, unbeknownst to me. All we can do is play our levels so far. So I'm going to go ahead and actually, this is a daily time frame, but I'm going to go ahead and back this down to a 4-hour, just get a little bit more granular because SPX only trades during cash session. It tends to be a little bit more difficult for people to understand because there's a lot of gaps. So we're going to go ahead and just kind of stick with the 4 hours. So this was the beautiful gap down that we had at the highs. We found massive resistance here at this weekly at 615, and they made a great push down. Now, where we actually really shined this week was in the Substack and really just our calls was this fantastic short at 55.8450. This was the daily leg to the all-time high. We called this way in advance, which led to a massive, massive push down of well over 200 points. So certainly not upset about that. I do have to tell you, though, this thing fell a lot faster than I thought it would. I mean, once they actually broke, Rob, I mean, it was just
Yeah, it was, and if you weren't on it, it came down very quickly. And
I
I
had trouble
personally
getting
found
on it.
it hard to hold on those moves down because I was, I've also been in a mindset where I've been buying everything, even though that was the
Yeah.
level. It was difficult for me to hold
Well, let's
on
be
that
honest.
push down.
They've kind of programmed us to keep buying.
Yeah, exactly.
And so it's like it's hard not to buy because they literally buy every little micro dip, for the past few months. And
Months.
then when
Yeah.
this thing decides to shit the bed, then buyers are nowhere to be found. And so, either you're short and it's hard to hold and you get, 10, 15, 20 points and then it goes another 50 and you're like, holy shit, but what can you do? Because this is really, it's just been out of the normal for us lately. So this short right here at the 55.84, we're going to show you on ES where this took place. And this was actually a big 4-hour zone. They actually missed the same exact daily on ES, but thankfully, as you know, and people who really trade with us know, we follow SPX as the leader because this is the true index. The futures, like we always talk about, is simply just a derivative, and there's rollover breaks in there and all kinds of different stuff that kind of, I would say, little kind of dilutes its purity a little bit, I guess you
Right.
could say, in a sense. And so this is really the index. And so this was a great short. Again, let me pull up my pen real fast here just so that people can kind of get an idea. This was the leg to the high, right? We smacked this, we came down. Now, what was interesting was, this area right here was the next little sub leg up, right? And as you can see, once they kind of broke this area, they opened up below it, and then this thing was just a free fall.
Yeah.
Right?
And it
So
didn't even, it sort of did that retest of that other daily area and then went back down again.
yeah. So after we had this big push down, we had a nice rally. So the thing was, is this low that we got the rally from, we actually called it beautifully also in the Substack. And we're going to show you on ES. I believe this was the 40 area, 5440 area, 40, 35, something like that. It was crystal clear. Actually, I think I have it right here. So Rob, I wanted to pull up the Substack real fast just so that people could see what we were talking about here. And this is where we talked about the 5484. You can clearly see it was circled right here, which kind of gave people the heads up of what we were looking for. We also talked about it in the Outlook, and again, you could see I clearly drew the leg up ahead of time and have a line here just so that people could understand how significant this area was. This area down here that we're talking about that we got the pop off of, I'm going to show you the following day where we kind of help call this out for people. but this is the 55.32 area that we were calling for the initial support zone here. So let's go ahead and pull that one up real fast, just so it makes a lot of sense to people, so they can understand how you and I, pre-market or pre-game our plan here. So now that I've shown you the smack from the high, and we also, for SPX, I didn't show the ES side of it, which is unfortunate, but it's fine. We'll get to it. But this was also the low here, right here. ES is approaching the support at the 54.42.36 area that we're currently, talking about minor support into SPX. So this is essentially what this area played. Now you cannot see it on SPX because obviously ES looks different with the rollover data. So we're going to get into that. However, this move down that we had, so we have the smack to the leg, we came down, they popped up, and then they played this support here that was another big daily, and they made a push down. Now on Friday, we rallied up again because they didn't make a new low. As you know, right here you can see they kind of held this low, and we came right back up and we retested this daily. Now, is this a bullish close? Not really.
Not really.
Yeah, not really. I mean, this is still looking a little rough in my opinion, and I do still think that we can, come down a little bit further. And when we get into ES, it'll make a lot more sense for people because I know there's a lot more futures traders than straight SPX traders, but using this from just a confluence perspective, we still have this gap that needs to be taken care of. They have not cleaned it up completely. They did what Rob will refer to as a half gap. And a lot of times those half gaps do play, which you can clearly see did from an SPX perspective. So we do have a lot of support still down here at 53.57, 53.53 spot. And I'd be willing to buy this. What's interesting is this exact structure, which we're going to talk about when we show ES, is actually the structure that ES played. So it's so odd to me how you have this, the same S&P 500, but you have two completely separate instruments that look fairly different from each other.
Yeah.
So we kind of we put the pieces of the puzzle together here. So this is the leg that we really need to get back into if they want to continue this move higher. However, in order to really kind of pop this area, we need to get back above 54.88 on SPX. This has been a huge daily that has played twice, and they're really not out of the woods because if they end up popping this, there is still an untested level directly above at 505. And so it wouldn't surprise me to see a little poke above and kind of psych everybody out and get smacked. Now, we had this huge gap down, and this area right here, this 55.65, I'm clearly not going to ignore that or the fact that they could come up here. But if they do, your risk to reward here is incredible. Right? So this is another daily leg down at 55.65 with your stops above 84. Yeah, I know it's 20 points, but whatever. The risk to reward on this is huge. You're probably looking at least a 3 to 1, or not even potentially more. However, I would be a little concerned about holding this once we got above the 88 or 05 and actually held. But this is a great level if they do get up here. So really what we're going to focus on right now, obviously there's a couple spots, right? We have this leg up. We have this 54.88, which is really, we're going to call this our line in the sand. Wouldn't you say, Rob?
Yeah, that's it right there.
Yeah, and when we show you exactly what that looks like on ES, it actually looks way different. This level on ES is this right here. And so I know it seems confusing for those of you who can't see it yet, but you will, I promise. All right, so in my opinion, this could go either way, but I do feel like we can still come down a little farther. However, because of the move we had down and the potential support that's been played on ES, I do feel like we might sit in here and digest for a little bit before we actually do make that move. I do think this week provides a lot of news. I didn't look before we started this, but somebody in our room was talking about it. Maybe if you could pull it up, Rob.
Yeah, I will.
What's cooking, that would be awesome. But again, they've held these lows. I wouldn't be looking for these lows to hold a third time. Everybody who's in the room knows that I was looking for new lows again. And in all actuality, I still think it's very much possible. I am not bullish yet. I'm not crazy bearish at the same time, but I still have very much of a downside lean. Looking at some of the Mag 7, they're still pretty high up there. And to be quite frank, I think tech is pretty much running this sell-off. NQ is down substantially. I believe NQ is down. I mean, I think it's down 10% from the highs already in a matter of like 2 weeks. So, tech is starting to sell off pretty good because they've had a miraculous run. I mean, you even called it bubble material earlier, that, we've been kind of AI bubbly for quite some time now.
Yeah. It's been running high, like especially NVIDIA and,
Absolutely.
So, yeah, all the AI stocks have been running really hot.
And not to get off track here with everybody, because we're not really talking about this, on this particular call. But, I track all the indices, and this is one thing that Rob and I were just looking at just now, is a lot of this money, when they come out of tech, the funds have to put the money somewhere. It can't sit dormant. And so it looks to me like a lot of the money is starting to rotate back into RTY or IWM, which is considered more value stocks. And so these things have been dogs. Everything else is just really rallied like crazy. And RTY has not had its moment yet. And it just had its moment really this week, where it had this, or last week, whatever it was, this ridiculous run up. And we are into major resistance right now. However, I do think this thing is probably the next to make all-time highs. And again, we'll see what happens up here. It may not happen right away. But just based from a technical standpoint, this thing looks like it's flagging to the upside to me. Wouldn't you say, Rob?
Yeah, no, it's definitely flagging.
Yeah. So, in all actuality, there's the chances of the money rotating out of tech into this are probably pretty high. We've got a guy in our room who actually works at a hedge fund. We could, ask him for a little bit more information, but I know that he's extremely bullish RTY. And the Russell in general. So, that says a lot about the flows. And also they're talking about rate reductions, and which will in turn just help, the Russell even more. So, we all know that the S&P and the NASDAQ are just pretty hot. Look at this thing. This thing looks ridiculous. And this is the monthly candle. A lot of people are like, oh, shit, we've sold off 200 points. Look at this on the monthly. It's a blip. It's literally a blip. I know. It's insane. So kind of getting back to this and just looking at what we have here, this is the area that I'm essentially targeting, this 53, 57 down here. I do think this is where we ultimately end up at, especially with this 54.88 being the line in the sand. Certainly mark this on your chart, guys, with the other one being 47. But really this 58 or 44.88, if they can't get above this, we're coming down. It's just that simple. This is the support to this high. This is the valley. And this is where it all is, this is everything. So without this, we're going to come down. And I honestly think it's very plausible, maybe even next week. So if for whatever reason, this daily doesn't get the love that I think it deserves, which I'm pretty certain it will. This is clearly very much untested support, and it would be a finish of this gap fill. We do have some pretty solid support down here on the weekly time frame. I would not be at all hesitant to buy this 52.77, 305 area. In my opinion, this could be the area that we would get long, Rob, and go play golf for the next month and a half.
Yeah, and ride it. Yeah,
for sure. Even if your position was fairly small, you could just add on every pullback at that point. But again, we'll wait and see what happens. What I would really like to see, again, I think this is going to play, no question. But if you wanted to really play it safe, if we did come down in here, wait for us to get back above this 57, and then it's just go somewhere, disappear. I wouldn't even day trade it. Just walk away from it.
Just walk away.
Yeah, for sure.
That is a trade to get in on and hold it. Like it's one of those ones where maybe take it in on a different account even, and so you can just hold it for a while.
Yeah, and one of the things that you and I won't speak for you because I know me. I always get very ambitious with my size. Right. I'm like, oh, this is going to be a banger. Right. And so I get all ambitious and then I don't hold it because I get emotional. So, one of the things that if we come down in here, just because this is a very high time frame trade, this could take weeks or months to even play out. But if this holds, we will make new all-time highs, and just size appropriately so that, you can stay in this trade and actually hold it. I don't care if it's one micro, maybe you add one micro and you add another one here and add another one here. And eventually you'll get a nice little size. But, the idea is to just size appropriately so that you can actually hold on. I know that is a constant struggle of mine. I'll put on five cars, and then it goes against me a little bit. And I'm like, oh shit!
No, all is lost. Yeah, no, it's a huge time frame play, and you are playing off of daily and weekly levels, so those are big.
Yeah, no, this is a big spot. But first things first, right?
Yep, got to get there first.
Yeah, so we'll go ahead and pull up ES, and then we'll kind of bust that down, and we'll show the same trades that took place on ES and kind of give an overall idea of what we think could happen, and then be on our merry way. One thing I wanted to point out, I just saw this right before I was going to pull up ES, was, I'm taking a look at QQQ, and because we were talking about the NASDAQ, and I'm a huge fan. I wasn't a huge fan of NASDAQ, but now all of a sudden I have this huge hard on for NQ, and it's really just a monster. And the thing is we are in this massive weekly area here. I was expecting this area to get swept, and they did, and now we're all up in this huge zone here. Now, can they come down into this more important support? Absolutely, it's certainly possible. But I have to tell you, this area that we played on Friday or Thursday or whatever it was. This is not an area to be taken lightly. I mean, this area is legit. So, again, like I said, can they come down? Yeah, of course. But, in Q, in as much as I'd like to call it bubble territory, I mean, we're down pretty far. And so let's just go ahead and take a look at this. Yeah, it's down 9.8%. It's 10% from the high. And it's like in no time. I think it's 2 weeks, right? So, I mean, what do they say?
I think 20% is bear market and 10% is correction kind of thing.
That's exactly what it is. Yeah, you're right. 10% is a legit correction and 20% is bear market. So, with that being said, I do have this awesome spot down here at 51. So they could dip a little lower. Weekly levels are big high time frame levels. And they did play it already, so it is tested. So anything could happen. It could come lower. But I do like this area. We have huge monthly resistance right here, or support, where they played this top of this structure. We actually took this long. I don't know if you remember that, but that was one of my better trades on QQQ. So long story short, this is a big area. And so, we could be expecting a bounce. So I don't, just because I think SPX can come a little lower, like I said, we are in huge support right now for both QQQ and NQ. They're both, all in this weekly zone. I don't like the SPX area very much. And so it's kind of, I kind of am leaning, there's two ways that it can go there for me, I guess you could say, little mixed signals. And ES honestly looks like it could come down a little bit more too. But again, I try to follow the indexes more so than my gut feeling. So here's SPY, and I know we're kind of getting off track here, but we're trying to figure out where we're headed, right? So we have the same exact daily that got hit here as in SPX, because again, this doesn't have rollover either. And so this thing is, but to me, this just looks potentially heavy. Now, they still closed within this leg, which was a very positive close, for this. I mean, in all actuality, they didn't exactly lose the weekly. So I'm undecided. I'm a little indifferent. I have to be frank. We are kind of in a tricky spot. I still think that just like SPX, it could come lower and really kind of play this area. I mean, I don't even know what they played here, Rob, to be quite honest. I mean, they didn't even really get that wick,
I know, like I was looking at that too. But I think the SPX was in that sort of mid of that no man's land, that sort of gap, and I thought they were leaning on that more than this.
Yeah. So again, looking at the S&P, I do feel like it could come down slightly, and we do know that even though that the NASDAQ is within support, It also has a little bit of room as well, and it would still be a total hold of structure. So now that I've gotten us clean off track here, all right, Rob. So here we go. So here is ES, and like I said, I mean, this just looks completely different. I mean, if you recall, we were still right in the middle of this gap here for SPX. Well, as we came down, this is the area that we called in the Substack. If you recall, 42 to 36, we came right down and we got a very healthy pop, right, which took us all the way back into our 51, 31, 32 area. Okay, and this thing produced a massive smack. If you recall, not only did this pop take us all the way up here, but this took us all the way back down, and we retested this daily like perfectly. And just so people can see what I'm talking about, I mean, this is it right here. This was the daily. We came all the way up. We hit this 32. We came all the way down, but we didn't make new lows. And then they went all the way back up again. And then this was that sell-off Friday that you were talking about, that you showed the big volume bar from
yeah.
Yeah. So not to get too stuck on the smaller time frame right now. So let me get this out of the way. But I just wanted to get a little bit more granular so people could see. Sometimes it's hard for people to recognize what's happening on the RTH time frame. So again, as you can see, things look a lot different. When we just looked at SPY, this weekly kind of closed above this prior weekly, whereas this was a clear loss to me. Okay, so for me, ES still looks potentially bearish. Now, our line in the sand, if you recall, right, our line in the sand for SPX was all the way up here, right? But what's weird is for ES, because the rollover, right, it's actually, for me, it's way cleaner. It's this bottom structure here, and it's clearly the daily leg that took us to the high, right? This is the support.
Yeah.
30. So this is all going to be about above or below 32, right? If we can't get above 32, we are coming down, right? And so, we're still looking at this. We still have a gap much, much lower right in here. This is a gap that hasn't been filled. This was rollover gap. So they cleaned this up on Thursday, and then obviously we kind of jerked around yesterday. But this rollover gap is cleaned up. So the only thing we now have is the proper gap below us. And I like this spot, okay? I really like this 53.69 area. And really something we shouldn't ignore is if they even do poke a new low underneath the 36.50, we still have some support at 54.19. Now, I'm not sitting here saying like you should take that blindly, but if 54.19 plays and they remount 36, we could potentially move back up to whatever the next untested resistance or support would be that we lost. We don't know what that is yet because
right.
Right. But with that being said, underneath 19, we're coming to 53.
Yeah, that's the big decision point right there.
For sure. And I really would like to see 5,300. And I know that's a big ask, but I've been talking about 5,300 since we lost it up here. I mean, this ultimately is the big, weekly, monthly support area, which is the same spot on SPX that I liked, right? So I would love to see that. The 100-day moving average is here as well. So there's a lot of reasons to want to get long and go play golf down here, without a doubt. And this is the same area we were talking about for SPX. It just looks slightly different because you got that rollover data that kind of screws everything up. So, that's the nature of the beast that we deal with, and that's why we watch both. Now, one of the things I wanted to share with you guys, if you remember right, I talked about that smack that took place on SPX. And I just want to show you guys because I don't want you to try to remember. So this was the daily leg to the all-time high. We called this in the Substack. It got smacked, 55.84, and got nailed. Well, they missed that in ES, which is one of the reasons why we watch them both, right? So this was the same daily leg here, which was 39. And you can clearly see they missed it right there. They missed it, right? So it's really interesting how that works. So let's go ahead and just pull over the 4 hour. And, we talked about this area as well, because I always do ES and SPX for obvious reasons. And this really is still the leg to the high. And this was the 4 hour significant support. So that was lost. We had a zone between 32 and 39. And as you can see, 32 played magnificently and really just took us down. And this is the spot that Rob was saying that if you kind of missed it, it was just so hard to get on it because, they gapped open, I think it was Thursday at Globex. And then when we woke up, we were like down here.
Yeah.
It
And it
was
just
gone.
That was after some earnings. And I don't think their earnings were all that bad. I think it was Google and Tesla, but their guidance wasn't all that great.
Yeah. And that's actually when our Tesla short played out. So,
and then you asked about news. And next week, we do have Apple and Amazon releasing earnings.
Oh, some more big boys, huh?
August 1st. Both
Okay.
Amazon and Apple the same day.
Very nice. Well, let's just, because you're talking about Tesla and we won't get fixated on that so we can continue the ES, I do want to show just one thing real fast here. Just so people understand, the foresight that we try to bring, and again, I don't like to try to steer people to make trades. I just give simply the way I see it. But right here on July 15th, as we were way up here, right? We were at $252. We were essentially calling for, we're short Tesla in this house, 240 puts, looking for 210, right? Well, that was our spot down here. So, whatever happened to Tesla? Well, for those of you guys who are trading, and excuse the chart, it's not cleaned up. I just pulled it up. Guess what we hit? 210, right? So banger of a short, banger, right? $50.
That was,
yeah, that was
one of the best trades this month for sure.
Yeah, I think it was fucking money.
Yeah.
So yeah, that was a good one. All right. So I guess that just kind of goes into what you were saying. So now let's get back into this so that people can see what's up. So we know our line in the sand is 30. And ultimately, we still have to deal with 42. Okay. 42, if you guys recall, and I made the comment about SPX, I said, listen, our line in the sand here is 48.88, but don't discount this daily at 05, right? Because they might be able to pop their head up and then just get smacked. Well, that's exactly how I feel still about ES, right? We know that our line in the sand right now for ES is 32, but we still have this massive 4-hour at 42. So if they pop their head up over this and hit this and get back under 32, this thing might be curtains. Okay.
Yeah.
So just something to keep an eye on. We're certainly not out of the woods yet for the upside. We have this move to the high right there, which played extremely clean. I mean, this thing played for almost 100 points. It paid for 90 points. And so if, my little saying, Rob, it was once support, it was resistance. So don't fucking ignore this thing. So I'm not, that's kind of my thought process there. So, this is the structure that I said I wanted to buy on SPX. We especially have Clay here. Now, if we come down, we still have a gap here, as you can see. Okay. The other thing that I thought, I don't want to get off track, but one of the things I thought was interesting about this spot, and that I'm a value trader, and I've kind of converted you into really looking at value. Before we look lower, can you see right here? It says 3-week composite POC.
Mm-hmm.
Price was 31.75. I was posting about this in the room. This is a 3 weeks. They're all put together, and that is our POC. And so, I knew that this area was something that we should really, really, really be watching. And as you can see, they came up and they smacked this thing, and it was over with. And then here we are again. So this is a big area for us to watch still, and you can clearly see just based on many different reasonings why this area still should not be discounted. So if they come down, they still have a gap to fill. And then our next area that we're looking at is 53.69. And then below that is this big weekly, monthly, daily area down here at 5,300. So we're kind of in my opinion, and you and I talked about this before we turned on the camera, we are kind of in this spot, right? We are stuck right in here. And as much as I think that new lows can happen still, there's still some more support directly below these new lows. And so it really wouldn't surprise me to see us kind of just find value in here a little bit before we made our next move. How do you feel about that?
Yeah, I think it needs to, because that area was also the area where you have essentially a huge low volume node, I could see it actually vibrating in this area and kind of like filling that in. And anyone who missed the ability to trade in this low volume node and kind of like fill it in, like the back and forth we've had.
Yeah.
And then whichever, between your red lines, those daily levels,
Yes.
whichever one releases, that's the direction that they go with. But right now, I don't think there's a lot of certainty in which direction it's going to go, other than it's going to try to fill this in for a bit before it does go.
I agree 1,000% with that. There was really no price action in here to speak of, right? I mean, you had this huge gap, and then they sat here for 2 weeks and pushed up, and then they only sat here for a few days. And so we really need to make a market in here. And I think that's what they've already tried to do a little bit, right?
Mm-hmm.
So, we know what needs to happen, or we need to get above to go up, and obviously what happens if we move down.
Right.
But like you, I think this area needs to be digested a little bit more. And when you really take it into the profile perspective, I mean, you can see that there is a real lack of volume in here, right?
Yeah.
Like this area needs to be plated, right? So
yeah, they definitely need to trade in there,
Yeah, for sure. And obviously, like we said before, I mean, I pointed out that gap before, this is not going to stay there. When they come fill it out, I don't know, but they're going to come get that at some point. A lot of people say, "Oh, gaps need to be filled right away." Bullshit.
Yeah, exactly. We've been waiting a couple of weeks on that one.
Yeah, a little over a month. This is 3 weeks.
3 weeks.
This is 3 weeks. Yeah, and this was actually. Let's just do this. Check this out.
No.
Let's undo all merges in this chart. There you go. So 1, 2, 3, 4, 5 weeks we moved up before we even came down to fill the rollover gap. And so, how long will it take us to come down and actually fill the true gap up? And that remains to be seen. So with that being said, I mean, Rob, I'd love to sit here and tell you exactly what's going to happen and what I think could happen. But really all that I can give you now, and I think that you can agree with me, is we do this or we do this. And until then, we sit in here.
Yeah, I think that's exactly right. And I wouldn't be surprised if we sat in here for a little bit and wait until maybe some more events, like either the earnings come out or something else that's a catalyst to push us one way or the next. Because we do have some events, but I think it seemed like it took some earnings to really push us around last time. So I wouldn't be surprised if we needed it again.
And pardon me, I didn't hear what you said. Did we have any major red tag news events coming up this week?
We do. Monday, we've got jolts in consumer confidence.
Okay.
And then Tuesday, we have ADP employment change numbers. And this isn't red tag, but the Chicago PMI usually also can move things. And that's also the day the FOMC releases their statement.
Yes.
And then after that is when we have Amazon and Apple earnings. And
so we have a big week.
Claims.
This is a big week.
Yeah, it's a moderately big week. Yeah, for sure.
Yeah. So we should get some action here. So, just as a recap, I mean, I know we talked about, these two levels, but again, if we end up pushing up, just remember 5607, because this is our next untested leg down in this move right here. So at some point in time, that will come up there and it will get the appropriate reaction that we want. Obviously, it's a lot more sexy if they come here now versus off this huge monthly, weekly. But you know how it is. I mean, it's higher time frame rules, right? So, if I would love to come up here now and then really just try to
jam it down. Yeah,
that'd be great. We don't always get what we want.
But. Yeah, those amazing touches on those highs there.
Oh, it was incredible. You talking about this right here?
Yeah, right there. Bang.
It was great. I mean, that was just phenomenal. And like I said, I mean, we'll just, I'm just show you one more time for the people, because you traded it with me, so you already know. But you can see that this daily, it's just really interesting, right? So this is SPX on the left, and this structure is So it's really interesting because this structure is what got those amazing touches on ES, right? But up in here, they actually had to come play this daily, which we had, and they low key kind of ignored this area. So it
Yeah.
was really interesting to see the difference. And when you calculated the rollover difference, it worked perfect, right? But it's just interesting how they're so disproportionate. I don't know what else you got, Rob. Anything?
No, I think that's good. I think we're kind of in a holding pattern. We've got a couple big catalysts coming up this week, but we know where the boundaries are and which way to play it once we see the break either way.
Absolutely.
It's
Well, listen, I got to tell you, I know it's been a long time since we've done this. I really enjoyed seeing you because you and I haven't had a chance to chop it up either. I mean, this is the longest that you and I've talked in weeks.
yeah,
So it's been nice to see you
nice to
again.
get back together.
Yeah, and I hope everybody enjoys this. I think we had a great little spiel going on. And again, we're going to try to get back on track and do this again next week. So if you haven't checked out the Substack, please check it out. We try to put out as many hits on there and information as possible. We do a morning outlook every single morning except for Friday. And then, of course, we have a weekend review as well, where we go into a little bit more in depth. Thankfully for you, you've kind of caught the weekend review already, so you can skip that one. But I hope that this benefits everyone. And Rob, I'm looking forward to banging out Monday with you, buddy.
Yeah, I'm looking forward to it. It's gonna be a good week, I think.
All right. Well, you enjoy your weekend, and
All right, you
soon,
too.
right?